They also sold all the gold, supposedly. I think the name on the clipboard just changed to one of the big families, and the people, the citizens, got ripped off. Don't forget, they got given $253, the British, per ounce for 400 tons. $253 they got. That's Brown's bottom. Sitting now at 3,030. The British people were ripped off. That was the family silver being sold off to the Rothschild families and the legacy families. It's still probably in the same place. It never moved. Like I say, the name changed on the clipboard. So they steal from you. That's their game. They steal from you through inflation. Central banker policy is inflation. It's much worse than they say. It's hyperinflationary. That's why you're now on two incomes and you're worse off than one generation ago was on a single average income or even below average. So we keep coming back to gold, but everything else is bleak. Everything else is bleak, bleak, bleak. Unless you're a military industrial complex a company in Europe, you might get a splurge for a while.
You're watching Capitalism. My name is Danny, and today's guest is fan favorite Francis Hunt of the Market Sniper YouTube channel. Francis, thank you so much for coming on, my friend.
Always happy to come and talk with you. It's always great fun. Thank you.
Yeah, definitely. We were talking so many things off camera that I just figured we ought to hit record and get some of this good, juicy details on tape. So let's just kick it off with you here, Francis. At this very moment in time, given everything that's going on, what is most topical for you at the moment?
Yeah, we were just talking about a divergence of opinions, and it's okay to have different opinions, and it's actually a positive thing. And in fact, you host those opinions on your own very good show. I know, and I'll mention the gentleman by name, David Hunter, has appeared on your show and is due to appear again. And it's fascinating that in a markets are made of having contrary opinions. And it's a good thing, because when I want to buy, I need someone who wants to sell. And the chips will fall where they do. And sometimes I feel, and it's always a dangerous feeling, a sense of certain things have very, very low probability of happening. I no longer say they can't happen, this can't happen. Anything that's absolute conviction, I know to be fatal. But I look at what's going on now, and when I look at other people who's forecasting a melt up in equities, I kind of say, how? Because for me, I've come to certain conclusions, and maybe I need to stress test those conclusions. Maybe they're wrong conclusions. But in terms of the debt markets, the events of CV19 were pivotal for me. You had a final blow off, and I've shown the charts before, and I'm always happy to show them again. But if we look at the US 10-year, you had an absolute final dip in rates that went right down to 0.3. So it was about 1/3% on a quite long-term debt market in tool. And then you ended up, which is the final capitulation in yields. And then you ended up with a complete change, a snap up to the upside. And that to me said end of 40-year bull. Mm-hmm. And it also began the process of the end of the fiat debt, because fiat and debt go hand in hand. The debt fiat. So you shouldn't just think of dollars. You should think UST stroke USD, because only gold is XAU, really. It's XAU against any currency you want to measure it against, any oil, but it doesn't owe oil anything. It doesn't owe Korean ones or dollars anything. There's no obligation. A dollar is a UST stroke USD. Different terms, they borrowed into existence. When you have one half of the seesaw go and lose 45% in the 3 years, that it did, that is beginning of the end of a reserve asset. It means it's no longer investable, because it was stable, generally ground its way up, never gave you high beta. You never got rich by investing in bonds, but you got a yield during a low interest rate period that's no longer really fully exists. And you ground up in capital value, a lot less than the equity market, which is why the equity was the 60 part, and it was the 40. But if you had a pullback and some dodgy years in the equity markets, that scared money would flush in a binary way where it was a choice of one or the other into bonds, and you get a little bit more growth on the bond that year that you got beaten up on the equities. So it reduced on a risk-adjusted basis your overall performance for any given year had a much more stability inherent than if you had just one of the asset classes. What changed in CV19 is that being stable was no longer part of the deal. It lost 45% in 3.5 years. That's what equity markets do in nasty bear markets. These are high beta equity market performances. That's tech stocks, type category level. And yet the yield and the upside it has delivered in the previous decade doesn't warrant that level of performance. If you're going to drop that kind of a bomb, you have to do lots of kissing and loving and big years to get away with that. And bonds, it's over inherently. But too many people have now gone short the TLT in terms of that's the trade. And actually, we think the European debt is going to go down. But I don't want to digress too much because I want to stay on this theme. So if you've got 9 trillion to roll, which Yellen essentially did, not only did she borrow like gangbusters, spend like gangbusters, feed the corruption chain like gangbusters, send money to Ukraine and Israel, everybody under the sun got something, you get some fiat, you get some fiat, everybody got fiat, and all of these things, they denounced a recession on account of we didn't get unemployment criteria to meet. It's never been a requirement before. But what they were doing at the same time as you were getting the very low growth numbers is they were hiring government employees. They were the biggest hirer of government employees throughout that time. All the cultural Marxism roles, etc., you name it, DEI, you just hire people on salaries, you're creating new money, they're paying it out, you're borrowing new money into existence, and you're creating fluff jobs. And this is actually the counter narrative that you're getting, and I really don't have a dog in the fight, even though it sounds like I do, with the Republicans now having to cut the cloth right back and talking about corruption, over expenditure, nothing jobs, etc., etc. In other words, we denounced the recession on a new criteria that never used to exist, and we created the numbers that showed much more employment than there was. Then we lost 1 million jobs, restating them. So we actually didn't do such a great job of hiring fluff jobs in the Biden era. And we are now in a cutting environment of jobs. So the unemployment, which is the lagging indicator, is the last to fall. And we will have a non-farm payrolls coming in the not too distant future. And I expect this one to really show the escalation in job losses. And in the last 2 weeks of the February number that got reported the first Friday of March, we saw an extreme acceleration that if you had projected that for the whole month, you would have had an absolute diabolical employment number. So the outlook for the unemployment is looking terrible. Where other anecdotes are, Washington housing market is down 21%, and there's twice as many properties up for sale than there typically is. Airlines, government has cut 50% of their spend with the major airlines. They have reduced their revenues by 20%, and that's had a knock-on effect of EPS on some of them as much as 50% earnings per share, because it's all at the margin. So these industries are surviving on government expenditure, government heads of departments flying across to talk to other government heads of departments, not using Zoom, having a jolly, etc., etc. All of that now being cut has actually affected an equities in Delta, United Airlines, that actually should be re-rated by 50%. If that's the new normal, which if we see what Trump and Elon are having to do, is the new normal, only more to come. In other words, it's going to get worse, the cuts, that is. The stock market should be, and has already begun, in my opinion, re-rating to the downside. This feels like the sell-off that nobody believes. This feels like the final day that buy the damn dip catches everybody in failure. Everybody has been so well programmed on it. Now that puts me in this sound like some sort of a perma bear. I'm not a perma bear. When they're creating funny money and there's liquidity, sure. But how do we get to a 60% Russell move upside, 28 for the NASDAQ and 34 for the Dow, and all of these percentages that see the numbers that some guests are putting forward? Well, where's that money come from? It's not going to rush out of the bond market because they won't get any new investors. You've already had a 45% correction on that. If they're cutting rates, which many people are expecting because of the slowdown and the unemployment that I'm predicting, that actually means the bond market's going to get a little bit of a bid for the first time after getting smashed for 3.5 years since our call in 2020, in August, the back end of it. It's actually 4 years, 4 and a bit years. So if the bond market is actually going to get a bit of a bid, where's it coming from? It's coming out of a hyper-valued stock market, in my opinion, because that's where the other liquidity point is. It's not in the consumers' wallets right now. They wrecked. The highest level of bankruptcies are occurring, the new highs in credit events, all forms of arrears, all the indicators that are on Twitter show an absolutely thrashed consumer. It's not early doors recession, it's deep into the heart of a recession, and I don't even think that we do normal recessions anymore. So in that environment, how is it, where's the money coming from that's actually going to buy the stock market up even higher? Well, can they do QE? Well, QE is issuance of new bonds and debt instruments, and they've already destroyed the debt market doing that. They've got 9 trillion to roll this year alone, and I think Peter Schiff was tweeting today, I think they've got about, throughout this particular administration, about 25 or 28, don't quote me on the number, trillion in entirety to roll that Yellen brought forward. So she brought forward by duration, not putting it out on longer term debt, getting it a tiny bit cheaper by putting it out on short term debt, and then building a bomb for the first year after this Democrat administration, which looks like it's all pretty well engineered to be a landmine and a poison chalice that's being handed over. How in that environment where you've postponed a recession that the Democrats should have had a long time ago, but kept throwing paper into the fire to create heat in the house with no roof, in a very, very inefficient Reinhard Rogoff type manner, we well through the 90%. How is it that you will see assets price inflation further on an already hyper-valued stock market? So for me, I'm in the bear camp, and I think this is very risk-offy vibes. We're seeing it in crypto, which is high beta, very soft at the moment as well, even though we've just had XRP, by the way, slight sidebar. Their cases and the appeal has been pulled. This is something crypto's been waiting for. It's about the most bullish event that could happen, short of FTX eventually paying everybody out. That would be nice too. But I mean, XRP having their court case, that is bullish for all alts. It's bullish for nearly all of crypto. It's the complete conclusion of the reining back of an aggressive and antagonistic SEC. Richard Hart in a smaller case, he also had his case, kicked out, etc., etc. So we've had all the bull. What is the alt market done? Nothing. Retail wrecked. Retail is wrecked. Retail is not buying the stock market up. Retail can't pay credit card, can't meet rent checks, and is about to be unemployed and going to have to sell house at any cost, otherwise get foreclosed on. So where does the money come from? Well, I think we need to have a full-blown, and remember the big problem with the inflation on the last time they did, there is immense scale of quantitative easing that they did. There was 7 trillion to the public. There's a little known fact that many don't realize. Over 20 trillion went to a handful of European and US banks on loans. So it wasn't just the 7 trillion. You're talking a number closer to 30 trillion on their very susceptible derivatives. And you might remember September, October of 2019, we had a major repo crisis. And they brought forward that help, the loans to banking. So once again, actually had a bigger banker bailout because loans, they're on loans. They don't get paid back. The system fails eventually. They never get back. They got provided liquidity with very flexible terms that none of us had got to see, even though our fiat got proliferated to do that. That money got issued. So we got to hold mega losing derivative positions, which could even be in the precious metals. Who knows what manipulation they're running for the overall overlords in all of this. But it is not a risk-on environment right now for me. And I think contagion is about to flow. Elon isn't selling his truck. It's very convenient, these fires burning his stock. He's having a fire sale, I like to think of, because actually he can't sell his stuff. The cars are better coming out of BYD. The consumer is properly wrecked. I keep coming back to it. That's going to affect Amazon. Funny enough, I do an Amazon silver chart, which is a very peculiar chart to do, but I also do it on gold. And I can show you when we went, the financialization of everything, the consumption of everything, and it might be worth doing the share screen just for that particular chart. So let me pull it up. It's going to be real fun. We've just done a video on the Korean won. It's going to be one of the worst currencies, but that's not why I'm bringing you here. Amazon, and we'll select it, and I'm going to divide it by silver, no less. And I'm going to show you a multi-decade chart on this. And to me, Amazon represents online retail, a strong retail consumer. So I'm going to just delete that. Strong retail consumer. And
so this is Amazon divided by silver.
Correct. Yes. Peculiar. Very peculiar. I love doing cross-valuation analysis. And we had a very good quality, macro, long-term, upside HVF that actually said, forget metals. It's not going to be pretty. Everybody is doing the internet, one world, buy your stuff online, shop. This is consumerism. This is the whole setup. And that is that draw over there. Let me choose the fat cookie so it really pops for all your viewers. That is that setup. It is an absolutely beautiful, big time frame, monthly setup that came from the highs of 99. You had the bear markets of 01, 02, and then you continued to tighten. You eventually got your breakout over here. This entire channel that I drove up here for you, that is drawn, I make it really nice and fat in TG Pink for everybody, is an absolute bull market in online consumption through your one world, your NWO online retailer. That is consumers strong, credit plentifully available, credit cheap. That is buying everything on Amazon. Then we got the AWS and the servers. It's now about 48% of the business. The consumer's still around 51, 52, the consumption, and they are wrecked, as I've already said. You then got the status spending on, okay, Amazon's going to do defense contracts for servers. We're all doing this AI, this tech, this biometrics of citizens, everything else that they're up to that we don't know about is all baked into that as well. Now you've got, hold on, we've got too much debt to roll. We can't spend what we want to do. Trump wants peace, and he wants some resources in lieu of what Biden already gave Zelensky. This is somebody who's now scrounging for a deal in retrospect. It's kind of like I loaned you a whole bunch of money. You haven't really paid it back. And then I say, hey, can you come and paint my fence? And how about I use your car for a while and you give us some of that money back? It's kind of like trying to fix a bad loan. I use the word loan most tenuously because I think there's all forms of laundering and everything else. When it comes to corruption, politicians are 100% the thieving classes.
Well, he admitted to losing about $100 billion of funding.
Exactly.
So how do you lose $100 billion?
Every time I sit down on the couch, about that much falls behind the cushion. I got to remember to just shake the cushion, and there you go. That was out my back pocket, isn't it? I mean, it's unbelievable. I mean, it's perverse. It's an indictment. It's an absolute acceptance of fraudulence and malfeasance. I mean, there is no other way to look at this. So anyway, this is the whole era of 2011 right the way up to 2018, 2019. Here it starts getting a lot more different for performance of quite a skittish precious metal against Amazon. And it's not been so straightforward for Amazon anymore. Now we're in this kind of vibe. And this is after making the upside HVF target. So we would have said to you, had you been in our community, forget silver. I'm not a perma bull metals. It didn't serve you to be in silver. You should have been in the hold your nose stocks. The government's printing the money. No one pulled their overdraft. They can keep printing all they could. This was the glory days right up. Yellen finished that game. She finished it. And CV19 was one of the nails in the coffin, and she was literally the last. And by bringing the duration forward like that, the amount to be rolled, it's absolutely obscene. There is no one with 9 trillion in the world to buy. China owns less than 800 billion of,
So
how
what's
can
going to
they?
happen? What's going to happen when they have to roll over all this debt at these higher
Well,
interest rates?
here's my personal take. They need a much lower interest rate, first of all. And by the way, that doesn't reduce the interest rate payment. The interest rate payment they have is already locked. It just means the rate that it will go up will be less. You either go from 1.2 to 1.3 because you have a major recession and interest rates collapse and you roll, or you roll them at current levels and you go from 1.2 to 1.5. And so, I mean, it's like in a single year.
Wow.
So that interest rate payment is already dwarfing the defense budget.
You're looking for great deals on gold and silver, coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
So it's out of this world. And I think this is the beginning of contagion to the downside for consumer stocks that rely on consumer. And there's most of them do. And even the ones that don't rely on the companies that do. Everybody thinks it's a silo and that you can stand completely isolated. It's kind of like the crypto people when we had a big crash. They thought, well, their stuff is different. The minute they had sizable market cap, they became a risk on, risk off liquidity play, just like tech stocks, only more volatile, even more flaky in certain senses. They thought they were special until they weren't.
This sounds a lot more severe than your textbook recession, though, doesn't it?
We don't do recessions, normal recessions anymore. I mean, everything is priced for perfection in the stock market, and everything in actuality is absolutely in hopelessly over indebtedness and is priced for should be priced for a major collapse. So you've got essentially liquidity that's pricing for perfection on the one hand, and you have a ridiculously over indebted and synchronized over indebted through Europe. Who bails during 2007 and 8, we suddenly everybody got onto the China train. Everybody collapsed in the housing in both Europe and America. Who put heat into the economy? China did until 2016 when they had their Shanghai moment. They bought everything out of Australia, copper, you name it. They built buildings and towns and everything. Then they had their debt bust too. They basically did a subprime in the time of creating heat in the global economy, where the only place that was doing okay. And that is why Australia missed out on the harshest downside, because they were nearby, relatively, and providing commodities that China consumed. And the rest of the world a little bit benefited from the heat being created from there. Now the whole world's down. Who's going to buy your 9 trillion? Who's going to buy it? Who even has that amount of money? Which nations? No, it's going to be self-monetized. What is self-monetized meaning? Well,
inflate away the debt.
Yeah, inflate away the debt valuation. That means the destruction of your currency. So the only way you get a melt up is if the country's buying power of the money halves in a year. Now, it's going to get bad, but it's not going to get that bad. You're going to have steady stagflation. And this is the other point that I differ from David. And as I say, it's a professional difference. It doesn't mean he's a bad guy because he has a different opinion. I'm making my justification, he'll make his. But his definition of stagflation is also wrong. He says, I'm not a stagflation person, and stagflation is when you have reasonable growth. No, it's not. It's when you have weak and slow growth. That's the stagnation bit, and stubbornly high inflation. It's the inverse Goldilocks, basically, that Greenspan gave you when you globalized, proliferated, destroyed currency, and you continued to offshore, that your actual inflation was masked by the fact that you were using slave labor to sew your football for Nike in Sri Lanka. And Chinese were working under heinous conditions for 14-hour shifts to make your whatever. And you got that once-off hit. But you actually still got inflation, but it was asset price inflation. And we never really deflated that. And now we get to do the dark side of the moon, which is instead of high growth, low inflation, we're going to do low growth, stubbornly high inflation. Definition of stagnation, inflation, stagflation. The definition isn't negotiable. I got it off Investopedia. I can share it to David. It's quite clear. That's the definition of stagflation. And we had the miracle economy, which was, hey, we're proliferating. We've been super liquid. We've run rates real low. Everything is just hunky-dory. Everyone was getting mass affluent. Their homes turned into ATMs. Every second year, you could release 20% of growth. Okay, fake money, all based on valuation. The financial engineering gets taken out of that. And guess what happens? There's no one to buy anymore. You're a boomer generation. The generations behind you is much smaller. And they don't have access to the credit. The banks don't want to lend. So another key point that comes in, it's not going to be the banks that provide the liquidity to take the Russell up 60% and all of that. Because right now on housing, we've had rate 100 basis points cuts, and the 10-year actually went up 100 basis points. We had a spell in the beginning of this year, it could have been the cusp of last year, where we actually had 100 basis points cut and the 10-year went up 100 basis points, 1 full percent. So you're not getting the benefit of cuts anymore. And what's happening in the lenders, they are putting higher margins and much higher collateral, and they're at record high rejections for mortgage finance. So they know that the leverage game is up. They want way more collateral. They want to literally have you by the short and curlies, excuse the phrase. You got to hand your mama and your auntie over as collateral, your wife and everything of value. And then they're going to give you a very bad deal. They're not competing with the other guy. They don't care if you go somewhere else. They'd actually rather you went somewhere else. They want to shrink their loan book. They want more capital. They know it's worthless, and they're sitting on a lot of rot with hypervalued housing and hypervalued stock market. The minute that starts correcting, at a time where the unemployment's about to spike and Elon is culling all the malinvestment, let's give him credit as if it's doing, not that I trust him or Trump, all the malinvestment, all these people are going to lose their income. That's a liquidity withdrawal. They're not going to get salary. They'll go onto welfare, or they'll sit at home and other people will have to, family members will have to pay for them. How is that an environment for a melt up in the stock market? And the cuts are happening. The airlines are down 50%, as I mentioned, on earnings per share, with a 20% reduction in revenue and just a 50% cut on the government expenditure. So that's one industry immediately affected. And this is going to ripple through the ability to pay rents. Everything goes down. The minute you start reining back and unwinding the deleveraging, is a contagion effect. You don't do this in an orderly fashion. We're too far gone. It's the junkie that is consuming 10x a lethal dose of heroin. And I can't help but keep using this thing. It would kill you or I at first touch. And he's already consuming that amount, and you take all his gear away from him and you say, green smoothie. He hangs himself in absolute mobility.
It begs the question, if not U.S. Treasuries, if capital flees away from U.S. Treasuries, where does it go? The U.S. Treasury market is a whopping $50 trillion. The global bond markets is at $140 trillion. You know, we can make the argument that this is why you're seeing this capital flight into gold, but the gold market is still relatively small compared to the bond market. Where else? I mean, aside, yes, gold, obviously, but anywhere else that capital can flow to?
Well, the reason why money in the equity market hasn't gone into gold, miners, for example, is they're too small. In other words, they've been so undervalued for so long, it almost like they have to stay there, because for big funds to start doing coverage on these guys, they're micro caps. We actually need them to get big enough just to be taken seriously, but it will happen in eventuality. But you've hyper overvalued everything else into these super liquid unicorns, you know, these statist, Facebook, Amazon, Google, these trillion super caps, Tesla. I mean, goodness gracious, Netflix. You're talking about a bad content churner out there with a dubious business model. But a miner hemorrhaging cash flow now can't get a bid to get into, you know, even be a couple of $100 billion. These things will change, but boy, it's hard because you've got to. You're now trying to drive a truck through a needle's hole because they've been so lagged for so long. People complain there's not enough liquidity. What happens when you start moving that massive amount of cash out of? That's the other point, by the way. US equities are having the highest foreign redemption and expatriation outside the US. People are calling the end. It's the right sizing of America. They're moving it somewhere else. They're moving it into developing nations. They want commodities, just like Trump wanted commodity out of Ukraine. The UK went before and signed a 100-year friendship deal, how they'll send soldiers to protect Ukraine, and they want rights on the minerals too. So you've actually got supposed partners killing each other and doing deals. It's like the last girl in town, and all the guys that are mates are busy fighting each other over it. Commodities are the thing. Resources are going to be the thing. It is inflation is the thing. And the things that haven't moved are going to start moving. And those market caps are going to start moving. So you're going to see massive rotation into resources. I don't think America has a big enough resource area, but they will definitely get a substantial benefit. And you're going to see a massive amount into the Bovespa, which is Brazilian stock for the softs. Have you seen what cocoa and coffee has done? I have to listen sometimes to the dollar milkshake guys telling us how great the dollar is. It buys the same amount of commodities as 15 years ago, a decade and a half ago. No, it doesn't. When last did you look at a cocoa chart? When last did you look at the Arabica coffee bean chart? When last did you look at the Robusta coffee bean chart? When last did you even look at copper? You claimed copper was the same. It's only really gold. No, it isn't. No, it isn't. So there's a lot of weird information out there, and it's not my place. I'm not the police cop of YouTube. Anyone who has a YouTube channel can have an opinion, but it doesn't mean it's a good one. And I feel this is a commodities and resources re-rating and reckoning phase, and it's a deleveraging phase in a hyper over-leveraged environment. Cars, dealers are going to go bust. Car makers in America are going to have a very, very difficult time. People that get financing for 7 years. I mean, I go to the US. I love America, by the way. I'm not dooming on America and Americans. I love the American people. I'm just telling you how the forces are set up and how it plays out. You have a 7-year mortgage and you still have a 40% balloon payment on something that is a depreciating asset. Hello, I'll be buying these things for cash, cheap, amazing vehicles in massive repo sales where there's going to be few people with cash. There will be the people who invested in gold and preserved their capital, and there'll be all the social rioters. It literally is going to become the polarizing, our most famous YouTube on the hill in London in Greenwich Park is that this is a polarizing event, and it's happening right now. They are cutting. The government expenditure is a huge part of the US economy, and they are cutting. How does that lead to liquidity? How does that not lead to more liabilities, more welfare? It can't happen. And you can't borrow new money into existence. You've got too much problem rolling what you already have. It can't happen. And now you're fighting for resources. And your allies are suddenly realizing it at the same time and fighting for the same resources as you. You've all played the liar game too long, and now you're waking up. It is part of the controlled demolition. Because by the time you're taking 10 times too much heroin, it almost doesn't matter. You're probably going to die in the end anyway. Whether you try to do the healthiest things, it's too late. You went too far. This is where we're at. And that is not stock market melt up. And it's not the dollar is awesome. It's still, apart from gold, buying you the same amount of stuff. It is a real warning to Americans. And by the way, just so that Americans don't feel that I'm doomering on America, it's the same for the entire West. The EU, if I take you over to this is a commodity play over a retail consumer play. If I take you to the debt markets, that's Bitcoin about to lose a trend line, by the way. I've been showing a few people this chart.
Hey, Francis, you're still on the Amazon chart, by the way.
Let me just share. Thank you for making that clear. While I jump through the charts, I will show you this one as well. This is Bitcoin that has never really seen the full Monty. It had CV19 and it collapsed to 4K. But it's never had the depression that we will eventually accept the subprime event was. It was.
So this is Bitcoin relative to gold.
Yes, Bitcoin divided by gold. And this red trend line you've been up and riding up on since 2013. This is a 12-year hold. And here's where you are now. Here's where you are now. And at my time as a technician, I'm betting on the red line being broken, not the blue. That's where I'm standing on that one. That doesn't mean Bitcoin can't have a moment and go high again. But this one-way train that has been this kind of trend line with the super high relative valuations over there, that is over. They're battling to get that over 2 trillion, while gold's gone from low mid-teens to 20 trillion.
Mm-hmm.
So the central bankers know something. The big hedgies and the billionaires know something. And it isn't.
Why are they building this Bitcoin reserve, though? Or why are they talking about building this Bitcoin reserve in the United States? What's the rationale?
Because they want you in a digital proxy while they own the physical intrinsic value, God money of truth, gold. That's my opinion. And I think the charts hold that up. You can pump a decreed liberty digital token that turns out not to have too much liberty, be totally searchable, etc., and all the lies slowly tumble out, as we said from the go, that this was positioned in front of gold as digital gold to try stop the retail from going into gold and to take it as the new thing. But it isn't. And the big money has shown you that it isn't in terms of what they're buying. Central banks across the world are not actually buying Bitcoin. They're buying the serious ones, the big ones. I'm not talking about Prison Island, Bukete, and his friends. I'm talking about big nation states, China, Russia, even Eastern Europe, and the Europeans are not doing it. Let's just show you what's happening in the debt markets for Germany, the fulcrum of the EU experiment. And it is an experiment, and it's in deep trouble. This, on a weekly time frame, the same pattern on the French, the Dutch, all of them, is a major spike in rates. So what's actually going to happen is we're going to see the Europeans now follow the Americans. Remember, they underinvested in military, which is why we've said the trade for America is short the military industrial complex. They've got to resize. It's their second biggest payment after the interest. This is what's happening here for Germany.
And you also have the European defense stocks going on a tear lately as well.
And that's not going to be good for Lockheed Martin, Raytheon, BA, which is one we called out a short. That happens to be airline, Boeing's, and defense. I mean, those are two industry sectors right now. Then you add their DEI experiments and everything else that's going on. You've got a company begging, thanks to pressure from BlackRock and various other means. This is controlled demolition. I mean, this is not incompetence. This is intent. And I'm just here tracking what is their intention. And this is the footprints in the sand. This interest rate for Germany, don't forget, they've been used to borrowing at sub 2.5%. That low over there, that was in 23, much lower than America. That low is at 1.887. Round about here, you're at sub 2.5. This takes you through 4. So think about their interest rate bill with all their welfare, all their immigrants, which is probably even bigger scale as percentage than what America has experienced. Although I don't have numbers to back that up. It's my suspicion only. You've got the UK in a similar boat, France in a similar boat. This is what's going to happen in their rates, because they're going to start now essentially issuing the equivalent of what's war bonds to start buying up Griffin fighters from Swedish companies, British companies, French, Mirages, whatever they end up doing. They're going to have a few lemons in there, like the F-35. They will waste money. Those planes will have their silver and their copper stripped out of them and be lying in the desert in a decade and a half's time. They won't even be able to maintain them. Why? Debt-based collapse. The rates are going up. If I just change a couple of nations here for you, what do you think that's going to do for American stocks? A lot of the money from Switzerland Switzerland turned into a hedge fund, into American Mag 7 stocks. Don't forget, they're withdrawing. They will be withdrawing. It's almost the same chart. This is Netherlands, the Dutch. So here you go. What's going to happen to the Dutch? They're all going to be required to make contributions and borrow. So they quite recently, February, which is yesterday as far as I'm concerned, they could borrow at 2.6. They're now at 2.9. The target here is going to take you through 4. That's a big increase. You're talking about 65, 70% increase in interest payments expected, the pricing the debt in when they start issuing more bonds. So they're going to have a COVID. So America borrowed money into existence for the whole world. They bailed European banks in those banks that I mentioned, not just American ones. Now the Europeans are going to fill the void of the big brother at their back in terms of the military. They are going to push their interest rate significantly higher. What does that mean? Every nation turns into a tax scavenger. They're going to get their harmonization of tax rules in. They're going to say too many escaping, paying, not paying their dues, all of this. They're going to go after everybody, and they're going to say it's only the rich. Meanwhile, it'll be anyone who earns more than 50 grand a year that will be soaked with taxes. So they're going to create culture, divide and conquer. We're going into governmental scavenge zone. How are you going to pay this interest in the Dutch nation? And they're already incredibly high tax nations. You're going to have France. I mean, wow. The French, literally, I can leave these charts on. They look, every one of them, the same.
Won't this create a tailwind into American capital markets?
So what could happen is there's going to be such a flight. If you're a bond fund and you have to be in debt, poor bastard, if you happen to have that job, because it's going to be a thankless job. It's going to be the worst asset class, in my opinion, for all the reasons I've already stated. But right now, actually, there's an excessive short on the TLT, the long distance, the long-term US fund. Especially after Druckenmiller and Paul Tudor Jones, November last year, came out talking their book once they got the trade on. They're late. What could happen is the release valve could be a little bit the currency now, and you could even get a recession and the rates go down. That actually means a bit of money will flow into the bond market out of the equity market. Again, that's not supportive of a moon. So the bond fund manager, who might sit with European and US, who looks at what I'm showing you now, is going to say, I'm selling the Bund, and I'd rather buy the T-bills. It's already had its 45% crash, may get a rally on the recession that the Americans are going to have with the cut. It's a recession that Biden shouldn't have, but should have had himself, but prevented by creating phony jobs and then saying we don't have an unemployment issue, therefore it's not a recession, even when you met the criteria for a recession. So there's such fakery. There's such dishonesty. It's very hard for people to know what's real. The inflation rate is higher than what they tell you. They are inherently inflationists. They want it that way. They need the inflation to destroy the debt. And with rates going up, you're going to see devaluation in the debt of the UK. So America's already had a turn to kill its debt valuation by 50%. China dropped to about 800 billion. That's not all sales. That's losses. So when you take a big loss, you're not doubling up to buy more, are you? Chinese are not for-profit buyers. They only do something if they're getting the gold discount window kept open for them, thanks to the banking cartel, that they'll make use of the losses they're making there and subsidize that trade deficit and turn it into gold. And that's already proven to be happening. And we can see that it's going from west to east, from how it trades as well. So you're seeing the French, I've shown you the Dutch, and I'm going to show you the worst of the lot, the British, who are talking the toughest. And I mean, Britain has to be, I mean, the numpty of them all, the biggest numpty of them all in terms of what they're doing. Let's just get that straight. It's GB, not UK, 10-year. This is the yields in the UK, and this is our draw. And again, these things are going up. These things are going up.
So what does that say? I can't read the numbers on the side.
Yes, sure. Let me just get the draw tool properly on it.
It's like 5%. Is that what it is?
We see them running through 5.7.
Okay.
It's taking a while to just lock on. Sorry about that. You get lies, damn lies, and statistics. We see a 5.76. This one already broke some time ago. You've been leaking out. Don't forget, they already had a pension crisis and a little bit of a scare on the bond market before this. So let's just see if that will draw properly. It's still not drawing properly. Let me just do one more time.
So while you're doing that, Francis, what do you make of this tit for tat between the United States and Europe lately? Is it legitimate or is it kabuki theater? What's going on there in your opinion? Is there a decoupling between the US and Europe when it comes to NATO?
There's absolute. So here's what happens. I point this out. I don't know if you remember the film Gatsby. It's kind of the roaring 20s. And everybody's partying, and he was the playboy with the fancy Morgan car, and they would go out and they'd dance, and they had these grandiose parties at his house. I mean, it ends with somebody shooting him and him drowning in his pool, which is quite a grim ending. But then you hit the depression. It's kind of like the US has been partying hard and had all these followers. I think of like Mike Tyson when he was, making huge money, and he had all these followers, and he ends up bankrupted. They're spending, he's paying for everybody's drinks, he's on everybody's dime. They're all following him because it's always a good time, and there's always someone getting them into a club. I mean, essentially, Europe were riding on the coattails of American expenditure. And suddenly, the Depression years come. The roaring 20s is over. He can't buy the drinks no more. He said, you pay. Other people are going, we don't pay. We just follow you and you pay. No. You pay. It's like, I can't pay. My credit card's been cut. My bottomless overdraft's been pulled. The trustees on my trust fund have said, no more, no mas.
That's a good analogy.
And that now means, the friends go, well, I don't know if I want to party with you anymore. And that's why you're seeing this pulling apart. And the Americans are going to say, okay, you're not partying with us anymore. You don't want to pay your own way. Well, we're going to stop funding NATO. You can have your NATO without you. Good luck. Call it whatever you want. But we ain't agreeing. And in fact, we want to make peace with Russia because it's expensive to run a war. And we can't do it anymore. And I'm already down for attacking Iran because my controllers, must do. So I need to pull out of at least one of those wars, Ukraine. So, that's how it is. He's got pressure, as I say, from his handlers to ensure he overthrows Iran. It doesn't have a central bank. His controllers are there. All these statements about, Iran cannot be allowed to destroy Israel. Well, what about Israel not destroying Egypt, Palestine, Iran itself, all the other nations? No, we don't worry about that. So we know who runs America. So if you're sitting in this environment, debt is getting destroyed. And the Europe is going to be half a cycle behind. The minute they try build a military industrial complex, that overdraft's going to blow up. And the maintenance on that overdraft, you don't have fighter planes and not have to spend small fortunes on keeping them in the air. That F-35 was super special. You literally need 9 hours of maintenance for every 1 hour of flight. I mean, it is properly garbage in terms of being a bottomless pit. And that just sucks you dry. And now Europe wants to go do that. And they're going to find out twice as fast what America's found out, because they don't have the hegemony of the dollar. They don't have the bottomless overdraft to start off with that America once had. So they're going to get finished real quick. This is going to be a short story. Some things are a long story and some things are a pretty short story. The European borrowing credit card for becoming a military power is going to be a very short story. Minute the rates go up, that's it. Sorry, we can't. And then they're going to turn on their citizens, and they're going to turn totalitarian, and they go into scavenge mode. And that's when unrealized capital gains, property, wealth taxes, everything. And this is the great problem we have globally, because it's all been synchronized. You need to find a place that you can make a stand where your property isn't going to be taken off you on account of unrealized capital gains, because it's not unrealized capital gains. It's the destruction of the currency. The property stayed the same value. In fact, gold is a plane that just maintains an altitude, and all the currencies are parachutists that jump out of it. And then we say, oh, isn't the French guy or the European guy falling faster than the American guy, who's falling faster than the Japanese guy? They're all falling to the ground. Those jumpers are now hitting the ground, and everyone's going, gold's so high today. Gold's at the same altitude today. You're told capital gains on your gold. No, gold's the same. It always was. You destroyed the currency so that you could tax me out of my assets. That is their central bankers' game of inflation. And we're already in the cutting and the handing out phase. This is not stock market moon phase for me. And it is stagflation. And stagflation is low growth, even weak growth. It can even be occasionally contractionary growth on stubbornly high inflation. And that is where we are, because it's the reverse that you had in the globalization period. And everything is reversed. We went from globalization to bifurcation, polar opposites. We went from low debt because we whittled it all away. Volcker ran the rates up so high, he destroyed it and brought it down in value. And that you had the stagnation, and to do it, you detoxed essentially. Now you've just been partying since Volcker. Greenspan is biggest financial criminal of the world, and every Fed chair that followed him are the liquidity team, right the way into pumping up bubbles the whole way through. This has been party, which I remember the Onion article of Americans want to know which is the next bubble for them to chase, .com, property. Hey, let's do it all. And then you have student write-offs. You're sitting at a couple of trillion there on student loans. Debt that hasn't been collected. They kicked it around with the Democrats. Do we collect it? Don't we? Oh, well, never mind. We'll leave it. They're going to need to collect that. They don't have the money. The people won't have the money. And this is where we're at. The credit card's been cut. This isn't an environment for risk on. This is a very, very harsh risk off environment. It sounds super bearish, but there's no investment that can come. Who's the buyers on current US debt? The fastest growing? Cayman Islands, Luxembourg, Belgium. Who's not buying? Who has a lot? Japan and China. Oh, yes, and the good old UK. That's also just shipped all the gold to try to keep America going. There's something coming there, and is now going to buy their debt. So UK is top.
You're saying the UK is trying to bail out the US with all these gold shipments?
Well, it might actually be owned by America. We don't know. We actually don't. To say I know, I don't. It would be obscene. I don't know anything. But gold being transferred from the UK is not a good trade for the UK, and being the big buyer, the biggest new buyer of American debt, not a great trade either. Right now, you might get a rally actually, and they could even go a little bit green on that. Long term, as an investment hold, dumping the gold, well, that's clearly been bad already. We've seen it since this even started recently. They also sold all the gold, supposedly. I think the name on the clipboard just changed to one of the big families, and the people, the citizens, got ripped off. Don't forget, they got given $253, the British, per ounce for 400 tons. $253 they got. That's Brown's bottom. Sitting now at 3,030. The British people were ripped off. That was the family silver being sold off to the Rothschild families and the legacy families. It's still probably in the same place. It never moved. Like I say, the name changed on the clipboard. So they steal from you. That's their game. They steal from you through inflation. Central banker policy is inflation. It's much worse than they say. It's hyperinflationary. That's why you're now on two incomes, and you're worse off than one generation ago was on a single average income, or even below average as a storeman, like Mike Maloney's story, where you would pay off your home and have all of these things. And there's all sorts of peculiar YouTube. There's a guy called Gary Stevenson who's become super popular, a working class hero. He does his, in hoodies, and he talks like an East Ender. He's like, oh, and it's like us in it. And he's all this like working class hero. And I was a £1 million trader for the banks. And he's a member of Open Democracy. And he's saying we need to tax more. He's tax the rich. The rich don't pay tax on any meaningful scale. They don't pay nothing in percentage terms. They don't pay on any meaningful scale. They can go anywhere. I'm talking rich, and the people he's talking about are billionaires, centimillionaires, owners of Elon, these guys. They don't pay. All their wealth is made in asset appreciation. And then they sell shares after a certain holding period, which is capital gains tax-free. Wait the 10 years. They don't pay tax. His salary isn't much. They work for free half the time. Steve Jobs worked for free. Why is he working for free? Is he benevolent? No, he's a billionaire. He's a multi-billionaire. It's much better not to have to do a tax return. You just make all your money in asset appreciation in your stock. You're one of the biggest single holders. So these are front men. You don't get those guys to pay tax. They're too smart for it. They're too well advised. What ends up happening is the middle classes pay tax. The people who do doctors, lawyers, jobs, etc. The middle class people pay the taxes. That's what happens. But you get all the plebs, all the crabs in the bucket, cheering for dragging all the other crabs down. And the real criminals are not even in the bucket. They're long gone. They're flying at a different altitude. So, there's so much bad I'm sounding like I'm having a good old moan now because I've called 3 people out. Francis on attack. Yeah, he's like starting fights in a phone box. He's managed to pick a fight with nobody and everybody. But I mean, it's just a YouTube algorithm popping up everywhere, and he's saying more tax, more tax. Isn't that funny? Isn't that exactly what they want? They want to go scavenge mode. And I say, no. We were better off when we were taxing more in the old days in Britain. His analogy is his dad was a postman, and the mum stayed at home and looked after them, and they were better off. They had a holiday every year. They paid their home off, and they now have a pension, and he's good. Those golden pensions for status workers should be torn up. His dad should get a crappier pension, and the millions he made working for a mega bank, Citibank, trading when he had the power of a huge balance sheet to never be wrong and double down, and to be in subprime and to put on a leveraged position, the exorbitant privilege of having a casino seat in a collapse at the time it collapsed. He should have all his money taken off of him and given back. I'd support that 100%. But that's not actually what he's saying. He's saying, look how good the life is, and taxes were higher. It has nothing to do with taxes. It has everything to do with the destruction of money. That one postman could maintain a family. He should be so lucky that he actually got to live that life and have all he needed out of one postman. Because today, one postman alone couldn't do that. And that's because of inflation and proliferation. It's the loss of buying power of money. So you're getting all these Jedi mind trick arguments. We should be like last time because there were high taxes on the rich. No, it wasn't the taxation on the rich that made your postman dad live okay on one salary. It was because the money still bought something. His salary still bought something. You've all been lagged. If you look at real average workers, they've been flatlined. The buying power of the money's been destroyed. So there's so many bad arguments, and I feel a little bit like a Cassandra. And then I have to look at myself and say, Francis, maybe you're wrong. Maybe I'm wrong. The stock market's going to moon. We can tax ourselves to wealth. Just up the tax rates. It'll all fall on the middle classes. They'll find a way to pay it. They'll sell all their assets to BlackRock, and we'll all be richer. And a single postman will have a family with 3 kids, and he'll pay. But I don't think so. I don't think the stock market, the Russell, is going up 60% in an environment of cuts. I don't think there's a benign environment for people that want to lend more money for governments. That credit card got cut up in 2020. That's why you had the 50%. These are my justifications, and I have real reasons for why they're happening. I'm watching the European market. Their debt's going back. They're half a step behind, and they'll fall harder. So this is not a pickup on America. The West is wrecked. The West is wrecked. That doesn't mean China's awesome. That doesn't mean every other place is awesome. But there's been a transfer of the wealth. There's a controlled demolition in place, and the West is absolutely wrecked relative to others. And people that will say it's still the best country to live, you're going to face a downdraft you have yet to see, because the contagion and knock-on effects of cuts has cuts, everyone making cuts. It goes all the way around, and you come back and you have to cut deeper again because you can't afford to do that. Everybody starts right-sizing once you deleverage. You realize how much money got made just on pumping valuation. When you take that same liquidity out, the cuts keep coming. And that's my big narrative. That's my big frustration. And that, by the way, is the turbo juice for something that holds value, gold. So we keep coming back to gold, but everything else is bleak. Everything else is bleak, bleak, bleak. Unless you're a military industrial complex a company in Europe, you might get a splurge for a while, but it ain't going to last anything like. So to be clear, in 2014, I stood on the master investor stage and said, buy all US defense stocks. And it's a trend for a decade and a half. And you can buy BAE as well, because they also traded a lot with the Americans. And I had a guy at the back of the room said, you don't know anything. BAE is terribly run. I said, it's not about whether it's well run or not. They're just going to have a wall of cash thrown at them. BAE, since 2014, is up about 25 to 30 times. Lockheed Martin is almost 100 times. Raytheon, 45 times since that date. I mean, it's ridiculous. Now, those guys die. Because who buys American arms when they don't want, China's not going to buy it. They'll have the switch off key in the back door. So Europeans are going to think, why are we going to make the Americans rich? We'll buy a European stock wherever they can. And it's a bad time to be in the military industrial complex. You had the defense minister come out and say, listen, anybody who's not mission critical is not sustainable. Mission critical. We used to brag that Americans had, for every soldier in the field, there are, I don't know, it was something around 27 support staff. Good luck. You can't stand on a pyramid like that anymore. If you need a soldier on the ground, you're going to need maybe more soldiers and a whole bunch less people in offices. And that's going to mean even the FBI, the CIA, everything, I won't be any tears about that. But this is a right sizing, and it's going to come for Europe too. And you're going to get the currency manipulations that, depending on who's running the rates, we've had the euro get stronger, not because the prospects of Europe look great, because their debt interest rates are going up just as America's are coming down. So the euro goes up a bit. Currency movements are neither here nor there. The whole seesaw of currency and debt, the whole bubble, it's in a bubble, it's in a fishbowl. That's why I have that image. I draw it, I show it to people. The entire seesaw is going down. The entire seesaw is going down. You just have a turn. Sometimes it's the debt's chance to go down. Sometimes it's the currency's chance. That's the diagram I draw. Currency and debt. But the whole bowl is falling. The whole bowl, and the water level is rising. Can you see that?
No, I can't. I think you're still on the trading view chart.
Yeah, so let me I have to go full, stop sharing and go one more time, and I'll share the full view.
Hey, Francis, really quick. I have a question. I want to get this in before we wrap up. This is a question from one of my Substack paid members. This is from Monica Reyes. And her question to you is, and it's apropos to what you just alluded to, she's relocating and moving to South America, and she wants to know what the best way is to move precious metals, i.e. gold and silver, abroad. For example, small amounts incrementally over time, and by what means? Airplane, shipping, etc. What would be the best method to move gold and silver safely from the U.S. to, let's say, in her case, Argentina?
So there's that's a very personal and specific question. And I wouldn't want to give, firstly, I'm not a regulated advisor, but I do have solutions. For example, I can just tell you our community, through our connections, gold can be brought from America. We buy from Scottsdale Mint, and it still can leave the country. And we have a vaulting solution in Panama. They run it all with armored cars. It gets there. They have a zombie apocalypse plan if anything ever failed, and it would be in Panama. She sounds a Latin American of heritage, and she's returning there. I think it's a great idea, and I wish her luck for that. And you can have it vaulted in Panama, and I'm sure once there, you could probably also then arrange for that vaulting to be changed to closer to home, or collect it in Panama and drive down. You might have to cross a few borders, and I wouldn't want to not know what the rules are, whether you had to declare or how well they search cars. So that gets a bit murky for me. But Panama, it's on the old American airfield. It's actually a free trade zone, and it's actually has its private police force. So even if you had a crazy dictator come in power in Panama, you cannot come on in there. It would invoke the sort of U.S. defense charter that they have and the free trade zone. So it's almost like a little bit of America that isn't America in that space, and it's very secure. And a lot of our community members are utilizing that. And you could have a vehicle that you own it in. It doesn't even have to be in your personal name, because then they just disclose a trust name that says, my apocalypse solution. So that's as far as I'm prepared to go in here. And we have specialists that deal with that kind of a topic to a far higher degree than myself in terms of that. But people should be thinking about these things. And the downdraft for the West will be worse than other places. And all the countries that other people think are third world or not as good a living standard that they might even look down on. I don't look down on any country, by the way. I make that clear. But some people might think it's a drop in living standards. So you should be considering these places, because their trend is different to yours. When the liquidity flows out of the West and all the capital formation flows out of the West, there's going to be far more liquidity and capital formation in other places. And they'll be getting a better crack of the whip, and their trends will turn. So, what's an amazing place today, but is in a bad topping out trend, is a dangerous place, because eventually exit taxes come. Then you can't leave, or to leave, you pay an absolute god-awful amount of your net worth to just get out, that you become trapped citizens. And ask me about that. I'm in South Africa, and I saw what they did to the South African rand. They made essentially South Africans overnight go from having, at one point, the rand was 2 you got $2 with a rand in the 70s. It's 18 today. But that was brutal. Your net worth in international terms goes immensely down. I warn Europeans and the Western guys. I am deep bear on all of this, and I don't see time for another blow off. I hope I've answered a question sufficiently for this level of discussion.
No, I think this was great. Anything else you want to talk about, Francis? I think we've covered pretty much everything I had on the docket here.
Yep. Let me stop the presenting screen. So, I mean, for me, guys, it's quite simple. Build wealth must be a priority right now, and there will be huge opportunities. So a lot of what I said must sound quite, oh, damn, it's terrible news. Actually, there's going to be immense opportunities. Crisis is opportunity. That Chinese word means crisis, also means opportunity. But for people that are badly positioned, you're going to get hammered. The people that recognize this and react, you actually could quantum leap your wealth. Build wealth during reset times. Absolutely possible. In fact, easier, but you have to recognize it and you have to position for it. Preserve capital. It's going to become essential. The scavengers are going to be coming out, particularly in the home nations that I've described. You need to get out to more friendly, benign places. We're going to be looking at ex-communist nations as more friendly and less totalitarian than democracies. And I don't like that word. And then securing your freedom, so that you have multiple points of residency, an ability to live where you like and have access to your wealth and not pay excessive taxes, and be able to do things you want to do from freedom of movement. There will be people that will essentially be nation tied because the exit costs will be too high, and they're already starting. California state has an exit tax. They want 10 years to still bag you. This is a beginning of a very, very dangerous money grabbing solution in an environment where liquidity is about to get scarce. You've had the pumpermentals. If you didn't make out like a bandit on the pumpermentals, you're about to get the dumpermentals. And it's brutal, lengthy, and you think it will end, and it never ends. You don't have to choose to be there. Not your monkeys, not your circus. Go somewhere else where you're treated better. And that's a key message. We specialize in that, building wealth, preserving capital, and ensuring you great freedoms for a high quality of life. Follow us on the YouTube, The Market Sniper, or go over to the marketsniper.com website, book a call and start talking to some of our specialists, get involved with the community. And I think you're going to find yourself amongst friends where people doing exactly what your question are going all the time. So just as an example, we have guys that have moved with their dogs. They're living in an Eastern European country with crazy benefits. We've got community members in Panama and in other parts of Latin America. They are living fantastically, bought homes, everything. They've even offloaded crypto to buy properties, all sorts of things that have a lot of details that had to go and transpire. We've got people in the UK that have taken children out of school, put them in a school that's a French-speaking school in a Latin country where the language is Spanish, and the kids are coping and surviving and actually going to thrive. And they'll just be trilingual. So children overcome things and they adapt and they grow. Your job as a parent is not to make an easy life for them. It's to do what's right for you and the family for the long-term future and to see what's coming. And if you do that, make the difficult decisions. Because I often get that, I've got kids, they can't leave school and all of that. They're having a great life. Having a great life, and the kids are learning and growing inside an amazing environment in a private school that might cost a lot more in the United Kingdom. So that's what we offer. Thank you for having me on. I know I've said a lot. I might have scared the hell out of a few people. It's a beautiful world. It's a beautiful life, but you've got to be smart and you've got to position. It's so much is about the environment. You can't be in the wrong position. You can be a brilliant executor in the wrong place. If you're on a flat ocean and an amazing surfer, you can't surf. You can't make waves. So rather be average execution in the right place and ride the wave. And that's what I aim to do. And that's what we aim to help our community with.
Fantastic. Where can people find you, Francis?
On the marketsniper.com website, where you can book a call, on YouTube under The Market Sniper, and on X, The Market Sniper. We also have The Crypto Sniper as well, both YouTube and X as well for that. So thanks for having us on, and I hope it's been interesting.
Always interesting. Well, guys, if you enjoyed this podcast, be sure to give us a like and subscribe to the channel so you don't miss another episode like this. Type "Go Francis Go" in the comment section if you agreed with Francis's analysis. If you disagreed with anything, seemingly somehow, let me know. I do read the comments. Also, check out our Substack at capitalcosm.substack.com, where you can get early access, ad-free versions, and uncensored versions of all of my videos, as well as you saw the opportunity to ask my guests questions. So all that stuff available to unlock on my Substack. And then finally, check out our good partners over at Pimbex, PIMBEX.com, for all of your gold and silver needs. And so with all that said, thank you guys for watching, and I will catch you in the next episode. Bye, y'all.